Today is Tuesday, March the 15th. Sunday night I did a video telling you that we are watching for the cross in the Dow Jones, the death cross of the 50 EMA and the 200 EMA. And it happened. It has happened now, and it could go even further lower. We had this Gartley pattern, which was a recognized shark pattern by motive wave, hit its point D, and it should be moving its way back up, but this is a concern. Now let's look at other times when the 50 crossed over the 200. It happened back here in March of 2020. That was the COVID drop. Didn't take long before it moved back up again. Well, it did. It did July. So, 4 months. When did it happen before that? Happened back here in 2018, and with in February, so that is December to February, only 2 months, did it dip below. And it dipped below here on December the 29th and crossed again in April. That was 4 months. So the dips below the 50 don't really last very long. You can go back. Here's another one. Keep going back. This one didn't happen. You see a touch there. But here's one. Well, this happened before we've got some data. So this is before 2008 when we didn't have a 200 moving average. But the 50 must have crossed over the 200 way back here in 2007. But the point is, if you look back historically, the 50 doesn't usually stay below the 200 very long in the Dow before greed kicks in and buyers come along. Now look at the NASDAQ. The tech-heavy NASDAQ also had this crab pattern, which was completed down here. Its 50 has crossed the 200 quite some time ago and continues to broaden. The SPX, the 50, and the 200 have not crossed yet, which is encouraging. Maybe the broader index, remember the Dow only contains 30 stocks, but the S&P 500 hasn't crossed yet, and its pattern of a shark pattern has been completed. It's come down now, and it's tested pretty close to the bottom of that February 24 shark pattern a second time and a third time. That should tell you that there's some possible move forward, but we still do have a war going on. The last chart I'm going to show you is the VIX, and can the VIX also have Gartley patterns? Well, this is one where X went up to A, pulled back to 88.6, moved up, not quite 88.6. There would be 88.6 right here, 1992, 1993, so it was 1 unit short, and it surpassed point C by 1 unit. I'd say that that's pretty symmetrical. Now, it calls for a move down. Are we going to see a move down to 8? Well, let's see. Have we ever had an 8? Probably not. We've had 10s. So we could go back there, but that would really be the beginning of a bull market. But the volatility index is not getting any higher. It was high on February the 24th. It came back on March the 8th, a little bit after the beginning of the war, right? The war is 2 weeks old. So those are the only 4 charts I'm going to show you. The last thing, though, that I do want to show you is the McClellan oscillator, because that's what we really live and breathe by. And today is March the 15th. McClellan oscillator took a drop down, a lower low, but it hasn't hit the oversold area. There might be one more day where we go oversold, or we could draw a trend line from here to here to here and say that that's going to be a support line. If it moves up, those 3 lines become a support line to the McClellan oscillator. You can draw trend lines on the McClellan oscillator just as well as you can anywhere else. Here's 1, 2, 3, almost 4. So you've got a wedge happening in the McClellan oscillator. So it's a breakout in one direction or the other. The bulls could not make it here. The bears only held it once for 1 day here. It's a toss-up. Which way will the market go? My bet is that I'm holding stock, selling some calls, looking for a turnaround solid turnaround in the next few months.